Can you all see the chart and see the screen, my screen? Can you see me and see the chart? Okay, cool. All right, give me 2 seconds and then we'll start. Hold on. Okay. All right, okay, this time, because this last time we did this, there were a lot of questions and it was like impossible for me to track them in the chat. So this time if you have a question, put it in the questions channel. So that way like I can ignore like the conversation in the chat. You know what I mean? So from now on these workshops, just put your questions live in the questions channel, and then I will just answer them verbally. But we're gonna do the questions at the end, like usual, unless you have a question about what I'm talking about at that particular time. I hope that makes sense. That should be pretty straightforward. Um, okay, so we're just gonna go one by one, flip through the charts. Obviously, there's been a lot of volatility in the last week or so, so these charts are gonna look different than when we looked at them last time. Um, there aren't any real points of concern for me. I mean, if there was, I would have expressed that already in my journal, but we're going to go over them anyway. There may be some stuff that I haven't noticed that I might notice. And on these chart review workshops, the one thing to keep in mind is that I'm looking at these charts the same time that I'm going over them with you guys. It's not like I prepare for these. I don't like sit down and then what am I going to say about the daily, weekly, and monthly? I'm just looking at them and then you guys are getting my live reaction to whether there's concern or where I think there's concern or why I think there's concern, or if not, then it's pretty quick and I just fire through them. So we'll do that. That should be fast across, we're not going to do the legacy position, so across 13 or 14 positions, and then we'll rotate to some Q&A at the end of that. Sounds good? I mean, even if it doesn't sound good, that's what we're doing. So, all right, give me 1 second. Get this pulled up. All right, so we have a lot of earnings coming up. I think between now and February 20th, we have several. Oh, I forgot to put this in the chat too. So let me put this. Actually check because some people don't check other stuff. Um, a lot of earnings coming up. Like I said, I think for out of the 17 positions I have, I think like 10 or 11 in the next 3 weeks. So things are going to be volatile. One thing to keep in mind, guys, because I know that there's a lot of expectation behind every stock I own to gap up on every single print. That's not how it works. There's going to be stocks that I own that go down too on earnings. That's like, that's how it works when you own a portfolio of stocks. Not everything's going to go up 20% on earnings. Um, it was funny because I said that about VAV. I was like, hey guys, we gapped up on the first earnings. I don't know if we're going to gap up again. And we did. So that was kind of funny, but that's not going to happen for every stock. Um, a lot of the stocks that I own have been very strong for like the last 6 to 9 months. And so, there's expectations baked in to all these names, right? Most of the names in my portfolio from last year have at least doubled. A lot of them have tripled, some of them have 4 or 5x. But most of them have at least doubled. So, that price action says that there's expectation, and if they disappoint the expectation, the stocks are going to go down. So don't be surprised on some of the names going down. That's going to happen as well. But if you're not in those names, and if you don't see me raise any red flags about the earnings reports and you are interested in getting them, that can be opportunities. I'm not going to buy the dip on every single stock that goes down. That's not really how I operate. I go in with usually about as much size as I want right off the rip. I'm not really a scale in guy. Most of you know that about me, but I do take advantage of opportunities um, on sell-offs when I think they're really good opportunities. Like Kratos at the beginning of last year on the earnings sell-off. I told you guys about that one. It was like 35 bucks on that earnings sell-off. I took advantage of that one with those leaps that I bought, but I'm not always going to do that. So you'll get my earnings reaction in my channel like you always do. I'm not really like a Substack writer, so you're not going to get, a 6-page report on what I think of the earnings, but you're going to get my reaction. I'm going to say, hey, I like the report. I saw X, Y, and Z. I saw what I needed to see. And, it's either thesis verifying or thesis breaking. And I go from there. So you'll get my reaction either way on pretty much every report. This week we have what do we have this week? We have Synaptics, obviously, which is one of my newer positions and probably the only position, yeah, the only position in my portfolio that I don't have a cushion on. Now, I'm still taking the risk into earnings. I'm still holding it into earnings, but that is the only position out of the 17 positions I have that I'm not like bright green on. Everything else that we own, I'm very, very green on. And so that's okay. I mean, I think that's pretty good that, out of 70 positions, we only have one that we're underwater on, but it is obviously going to rear its head as having more risk as we come into this report because I could get buried on my cost basis. I think I'm fine to get buried on my cost basis on this one a little bit. And I'm going to give it some wiggle room because I really do like the thesis. Just no guarantees that it pans out this quarter. So keep that in mind. We have Synaptics this week. We have Huntington. We have as Amcor this week, I believe so. Um, no, next week. But we have THR. We just had Viavi. We have ENS this week. We have Amazon this week, but that's, legacy position. I don't really think about those. Synaptics this week, Huntington this week. So you have quite a bit of stuff coming up this week and next week. GLDD is in a couple weeks, 16th through the 20th. They haven't announced the exact date yet. Pangea Logistics is until March. Kratos is end of Feb. So February is going to be busy. February is going to be a very busy month in terms of volatility and in terms of me just having to pay attention to these reports. Obviously, we got the bounce we needed in the markets today to save a lot of charts. For the last 2 years, pretty much every time we get into these moments after 2-day like gap down sell-offs like we saw last week, um, the market keeps saving itself. And structurally, that's exactly what happened today. A lot of the action, stick saving them charts around the 21 EMAs on a lot of names. And that's what you want to see. You want to see buyers stepping in where they need to step in. So yeah, that's what we're dealing with right now. We're dealing with a market that continues to be very, very resilient despite all the macro noise, despite everything else. And you have to dance to that tune as long as it's there. I don't think you can. I mean, some people like to be contrarians and just call the top every 3 months, but that's not me. I operate as a trend follower, and I'll follow the trend as long as it's heading in the same direction, and it's been up for a while, and it continues to be up. So until the market gives us a reason to panic, we won't panic, and we'll just continue to stick to monitoring the individual names that we own. But anyway, that's a little bit of backdrop, but let's get into the individual charts. So this Pangea Logistics. Um, I really like how this thing is acting price action wise. So back here, obviously we weren't in the stock back then, but back here in late November, got that gap up, spent, the better part of the next 2 months consolidating. And then, we get in here, we bring in a big flux of volume from our community, but this thing held so well. You see this low volume pullback, basically with air to the nine, didn't even touch the nine. Then you see this consolidation candle here, pop back to the highs of the range. More pressure here, and then today you get a nice move into 880, which is above the highs of this candle. Really, really pretty action, and you're letting this 9 EMA catch up here. 9 EMA is now sitting at 818. That's lowering our total risk in any kind of pullback. 21 EMA is also rising. We have that trading at 770 now, which is above my entry. So structurally, this thing looks great. And, again, when you have a stock like this that's trading above all the moving averages, there's just really not a point of concern. What continues to keep me liking this one is the tightness of the moving averages here on the monthly. You see these monthly moving averages stacked nicely. And then on the weekly, especially. The weekly, it just looks very, very pretty here. You see, this 50-week moving average, which slipped below back in August of last year and is now curling back up to potentially cross here, get the 5,200 cross, get your golden cross, and flatlining 100-day, allowing these shorter moving averages to push up and start really accelerating to the upside. That's what you want to see. And nice grouping here of the moving averages. To me, that shows you have room for this thing to continue to expand. Looks great. You zoom out on this thing and you start seeing the perspective on the structure here, right? You start seeing what we're doing. More you zoom out. Back here, you had this thing. I guess it was a D-SPAC. I haven't looked into what happened back here or something, but there was some consolidation of price, dropped off a cliff, spent years down here, climbed up. Nice, beautiful, very, very textbook uptrend here. You can see all the way to 8, came back down, and now we're curling back up. And you can probably get better perspective here on the monthly chart. On the monthly chart, you can see here this sort of cup. You'd like to see this flag a little bit, maybe push back into 8.5, 8.6, flag a little bit here, and then take off. As long as it defends this 790 area, local highs from back here, treat that as a rough support, 789, 790 could continue to defend that spot. I think you have really, really nice structure building. And you can see, look at the monthly chart. We talk about volume sometimes, but just look at the accumulation here. Very, very clear accumulation, right? No signs of distribution. All the big candles are the green candles. The buyers are very, very much in control of this stock really since mid 2021. So looks great. No problems on this one. And really no points of concern at all. So these charts that are sitting above all the moving averages on the daily, weekly, and monthly, there's not much we're not gonna sit around and say much about this chart because it's working for us. It's climbing up. Structure looks great on the daily, weekly, and monthly. Not really something that we need to sit around and worry ourselves too much with. When we have um, structure breakdowns on one of the time frames, the daily or the weekly or the monthly or all of them in unison, that's when we start asking ourselves, okay, where might the stock stop? Where might it find support? What might be a good dip add spot? But this is not one of those names. It's not trending down. It's trending up on all time frames and above all the moving averages on all time frames. So that's just a stock that kind of, for now, is stress free. I'm not saying it always will be, but for now, it's stress free. If we ever see a daily breakdown, then we'll pull it up on our priority list to take a look at. Okay, so ENS earnings coming up this week. Obviously, ENS has been on a parabolic move since we got in, right? We got in right above the break of this local high. So we got in 110, 112-ish, above this local high. I ended up exercising some contracts in December. As you guys know, that raised my cost basis a little bit. I don't know exactly what it is. It's on the portfolio updates, but raised my cost basis a little bit above 110. But since then, we've just been riding this thing. Obviously, by far the biggest position in the portfolio. It's the first position in a long time that I've had that's consistently been above 20% weighting. And when you have a weekly chart like this, I mean, I don't know how many weeks are in this, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, I don't know, like 26, 27 weeks in here, and you have like 1, 2, 3, 4 red weeks, and they're just not really red weeks. I mean, they're just consolidation weeks, And you look at the action here around this 150 spot. I mean, that was a fierce defensive support. By the way, on some high volume selling too, but they just couldn't bring the price down. So this thing's been acting like a beauty, continues to go curl to the upside where we want it to. It was in sort of a consolidation trend for a long time down here in this 110, 113 range, and then now has just been parabolic. So earnings coming up this week on the 4th. I think the stock remains very, very cheap, even though we caught this parabolic run. I think this remains very cheap. And so I'm staying in it. It also, I think, gives, sort of a dual theme exposure to the battery industry, gives a dual theme exposure to the power grid as well. So just a name that I like, probably my favorite stock on the market. I said that last week too. I think I have to let my money speak for me when it comes to the weighting of this stock in the portfolio. So, I clearly like it a lot if nearly a quarter of my net worth is in it. So, um, Yeah, I continue to love this name. Working well for us, has not given us any sort of stress or reason for concern for a long time. No guarantee that the earnings are going to be great. I have no idea. I don't have any read through to the earnings, but the last earnings were really good. So hopefully they post another quarter like that. If not, and you do get a gap down in the earnings, you should start looking at this 170 area potentially as support down here, the 21 EMA, or this 165 9 week could catch the stock. I would expect it to catch itself based on how strong it's been. If there is a pullback, I would expect itself to catch itself in that range, in that 165 to 170 range. I mean, bit of an instinct call there, but I wouldn't expect it to go lower than that, even on a bad report, in my view. This has been a market leading stock in, basically on every time frame for the last several months. So yeah, looks great. Again, not really a stock that we're gonna have any concern about. Amcor, same thing, really riding its way up the 9 week. Daily has started showing some points of concern in the last couple of sessions. We are headed into earnings on this one on the 9th, so next week, 7 days from now. That earnings will be on Monday. This name is obviously a name that I continue to really love. It's twice the valuation from where we bought it, so that does pose a little bit of a valuation concern in terms of them needing to execute on this coming report. A lot of the story about Amcor that people are betting on, the reason that it doubled since we bought it last May, is the fact that people are really excited about the Peoria facility in Arizona. People are really excited about how intimately that'll be tied with TSM and Apple and Broadcom's initiatives. And so that story remains intact, very much intact. And as long as shareholders can keep looking forward to that story, then I think the stock can continue to hold up. But keep in mind, last quarter, we saw a little bit of gross margin compression. The reaction wasn't that great off the rip for those that remember. But I stuck with the stock, and then we ended up turning around in, the high 20s and just didn't look back from there. And now the stock, is trading in this 48 to 55 range for the last couple of weeks. Now, what you are seeing here is in the very, very short term, a little bit concerning. Again, one thing to keep in mind, especially if you're a new trader, Druckenmiller talks about this, or it's where I learned it from, was from Druck. But he talks about when you're looking at these different time frames, daily, weekly, monthly, how you generally want to think about it is the daily is giving you about 6 to 8 days of perspective. So the very short term, the weekly is going to give you about 6 to 8 weeks of perspective, and the monthly is going to give you about 6 to 8 months of perspective. Now, that doesn't mean it's a crystal ball. That doesn't mean you can look at a monthly chart and say where the stock's going to be in 8 months. But that's generally how you should think about these, multi-time frame analyses. Is that if you see something concerning on the daily, but the weekly looks fine, that probably just means that there's a flash in the pan sort of concern and not something that's going to drag the stock down for several weeks or several months. So that's really why it's important to keep that in mind as a rule of thumb. Now, on the weekly, we obviously don't have any points of concern, right? This thing has had a habit of coming and pushing into this 9 week EMA. You see it done down here, this 2970 spot where probably a lot of people got scared out, right? That was the lows of that week. And then you look at the close, still a close above the nine. And then you look at the week after that and a nice push right off the nine, right? Here, same thing. Close really close to the nine, not quite a touch like we got there. And then look at the week after that. Big boost off the nine, right? So we've seen that action as this thing has crawled out of this base. So we should expect it to have gravity to the nine EMA. That should not be something structurally that concerns you, right? If you look at this stock and you go, okay, well, on its way up, it has shown a tendency to have gravity to the 9 week EMA, then you shouldn't get concerned when it's heading down there. Now, um, could this pull back into 44? Yeah, but you can look over here, this 47.30 high, this local high. You'd like to see it defend that, you know. Could it pull back a little further? Sure, but you'd like to see it defend this local high from back here, right? You'd like to see it defend this 47.30 spot, ideally. Now, it doesn't have to, but again, you would like to see that, right? And this 9 week EMA is sitting around 45.65. So I think if Amcor shows another sort of slight margin compression quarter where there isn't a lot of momentum in the underlying business, some of these newer shareholders who bought way after we bought might get scared out. They might get impatient. They may not want to wait for this narrative of the Peoria facility to play out, but I'm willing to wait. And so for me, I'm okay with a 5 or 6% move to the downside if people want to get disappointed with a slower print. What I would really care about is their guidance on if the timeline has moved, if the timeline's moved up. Are they seeing any tailwinds from the advanced packaging shortage in general, even pre-Peoria? I'd like to see commentary around that. So, we'll find that out um, next Monday on this name on Amcor. So yeah, like I said, weekly, monthly look fine. Daily is showing some points of concern, but again, you can't be too concerned because look at these last few moments that I pointed out, which by the way, it's funny that these correspond, right? Because you look at the weekly, you catch weekly support here, you catch weekly support here, right? But look what was happening on the daily at that time. You look here and you look at this breakdown. This looks concerning, right? In the moment, this may have been concerning, but it was preceded by a monster move to the upside in the stock, right? So shake people out here below the 21 EMA, right? Shake people out here below the 21 EMA, but it's finding support at the 50-day. It's finding support at the 9 week. And then the next week, you just absolutely gap the stock up and leave all of those chasers behind. And then what happened here? Same thing. Stock comes below the 21 EMA, gives a really, really concerning candle here, then wicks back up, then gives another concerning candle here, right? And if you didn't get shaken out on this one, some of these short-term traders definitely got shaken out on this one. And then what happened the day after? Boom, right back to 43, and then boom, 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 four huge candles in a row, right? Four gaps in a row, just send this thing back to $53. So you know this thing has shown a tendency to shake people out. Look at all of this lack of fidelity, right? To the 21 EMA, these shakeout moments. Like, look at that close. Ugly, right? Ugly, 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 ugly. But the stock continued to trend up. So you want to be careful about those moments on the daily chart, and flip to the weekly and monthly chart to give yourself some grounding and some perspective on these types of names. Okay, next up, let's go to OSS. This is another one that's shown us points of concern on the daily chart recently, but another one where the weekly, right? Look at that gorgeous look on the weekly. That is just beautiful structure. You look at these high volume buys here, boom, boom, all the way up into 13, low volume selling, an attempt to allow this 9 week EMA to catch up. And on the monthly, of course, same thing, right? You got structure that's just now starting to peel off. You saw this closeness of the MAs here, and now you're seeing them start to expand. Monthly is a little extended, but again, as long as you allow this weekly to catch up, I think it shouldn't be too much of a concern. So for those of you that are not in this name and maybe missed my initial alert down when it was $4 or $5, I got in at 471 here. Some of you got in at five, some of you got in around six, but most of you should have gotten a pretty good entry between 4 to 6 on this name. For those that didn't and sort of waiting for a better opportunity, well, now you might have a shot. So here you have the stock come below the 21 EMA, right? Could stick save itself tomorrow for all we know. But you want to say, okay, keep some perspective around this 875 level, right? You see the stock come down here, you may want to take that risk. Now, alternatively, you look over here and you see this trailing 50-day, which still has quite a bit of room to the 9 and 21. You may even get it to come all the way back down here at 791. So you want to look 790 to 870. I know that's a big range, but you want to look for the stock to find some semblance of support within that sort of range. Now, why this 790 level is even more attractive, look at the local high from back here, right? From back in December, that was the local high, marked the local high there too, 7.9, and then you have the 50-day climbing up. So in a broader market sell-off, I could see 7.9 as a very, very attractive entry. Now, is that guaranteed to happen? No, of course not. Stock could just reverse tomorrow and be back at the tens by the end of the week, if it stick saves this 9 EMA. So you're not guaranteed to ever get pullbacks just because stocks are breaking below their moving averages. But what it can do is give you perspective on how low they could fall in a worser case. So you want to be a gambler? You could bet on a stick save night of the 21 EMA here. You want to be a little bit more patient? Maybe you look down to this 875 level. You want to be really patient in the next market pullback. I think you look to that 7.9 spot as an area where, I mean, even I might buy more at that spot, even though it's way above my cost basis. So that's a very, very strong, I think, potential area of support around 7.9 for OSS. Continues to remain one of the only two small caps in my portfolio, this one and PANL. So I continue to like the name and the opportunity. Obviously, they're trying to become more of a pure play on OSS after the sale of the Bresner unit. So that might bring some bumps in the road. There might be some inconsistencies in their revenue mix because of the sale of the Bressner unit. So you have to be prepared for that, and you have to be prepared for volatility. I always tell people, do not follow me into small caps. This one, Pangea, any of them. Don't follow me into small caps if you are a baby about volatility. If you're like a crybaby, don't buy small caps ever. Because small caps go up and go down a lot, and they do it fast. Double digit moves. If you can't sit down and your stomach's not calm when a stock's down 10 or 12%, don't buy these names. I know it's all fun and games when it's just going up in a straight line. Everyone loves that. But as soon as the volatility starts, the weak hands show up very quickly. And if you have weak hands, you just can't really effectively trade small caps, in my view. So don't ever follow me into sub 1 billion market caps if you are a crybaby. Okay, Synaptics. This one's coming up this week. Another daily chart that has been messy, given us some points of concern. This Friday candle was really, really ugly. Today you got a gap, couldn't reclaim the 9 EMA, which a little bit unfortunate, but did get a gap today to save the 21 EMA, which is a nice sign to see. Weekly structure looks absolutely beautiful, right? Despite all that noise last week, this is why I stayed very, very committed to this one because you look at this 9 week EMA, they allowed it to catch up, right? And look at how respectful price has been around this 9 week EMA. Like, look at this action here. This is 3 months of action here. And you can see it wants to show gravity to this 9 week EMA. We keep talking about this 9 week EMA on so many charts, right? It wants to show gravity to it. Look, you get these two candles, right? Push the stock above the 50 week and the 100 week. Then what happens? You get this soft retest of the 100 week, but no, the 9 EMA is still too far apart. So what does the stock do? It breaks back below, right? And these are the areas where people get shaken out. Breaks back below and then gives you another red week to bring it right into the 9 week EMA, right? And a lot of traders would have been like, oh, you know what? This is a failure to break out of the 100 week. I'm out. But what happens? Comes, touches that 9 week EMA, and then what? Three monster weeks, send it all the way to 94. And then what? Same thing here, right? And I bet you a lot of people got shaken out of it here too. Same thing. Gives you this big gap. People and some people might be looking at this and go, "Oh, 200-week rejection." I mean, I like stocks that are consolidating below their 200-day after a long time that have these up curling shorter term moving averages. I like setups like that. I've talked about it on my previous workshops. This is the sort of weekly setup that I like. Now, is it guaranteed to work? No, not every stock I buy goes up. I know it seemed like that in the last 9 months, but some of you found that out too with CRML. I mean, not every stock I buy is going to work, but I do like this setup here, this little pinch we have going on, and the fact that this 200 week has been such a nuisance for the stock for so long. I'd love to see it just give us a nice gap here and bring these moving averages up and start to rebuild structure. So that's what I'm hoping for. I'm hoping that this earnings this week is the first sort of opportunity for the stock to do that. But in spite the concerns and the sloppiness of action on this daily chart, which it's really only been sloppy this last couple of weeks, but despite the signs of concern on the daily, I think the weekly looks fantastic still, and I think this monthly chart here, you zoom out a little bit, looks fantastic too, right? Like this support around the 200 month, and now trying to build above, and you just have a lot of moving average convergence here on the monthly, which to me says stock has room. What you don't want to see on this monthly chart is these moving averages just all gapped apart and the price super high above. That's extension, right? And so this is the opposite of extended to me on this higher time frame, and set up this nice even the yearly on this one. Like, look at the yearly on this, right? Like, that's a nice look. It's a nice look with a lot of range, right? And so I don't think the expectations are overtly high with this one. Like, look at this. This is the daily chart of the last 15 years. Like, does this look like a stock you're chasing? Not to me at all. It's trading at the same price it was trading at in October of 2015, right? So, I mean, really as far back as 2014. But um, this is the opposite of an extended chart, opposite of a chasey chart. I don't think the expectations are very high. The valuation's very reasonable. It fits the edge inference theme. So we'll see what happens on the earnings. But like I said, this may be one name where I'm willing to break my rules a little bit. And even if it does go down on earnings, I may be willing to just buy more. Um, I always talk about I don't bag hold, but sometimes when I like the thesis and I like the risk reward, I break my rules sometimes. So I think I've earned the right to do that based on my instinct. So sometimes I do. Sometimes I do break my rules. This might be one that I break my rules with. depending on the earnings reaction and depending on if I like the report, right? I mean, if the market sells the stock and I don't like the report, then I mean, then I'm not going to buy the dip. But if I like the report and the market sells the stock, those are dips that I do buy. So, um, we'll see what happens on that. But yeah, that's kind of what I'm thinking. Okay, what next? Looked at Pangeo. Let's look at VAV. What a beauty that thing has been for us these last 2 weeks. This was the first chart we touched on in the last chart review workshop, for those that remember. Very first chart we touched on. Might have been intentional. But this thing's been gorgeous for us. I mean, earnings gap up. I said maybe we shouldn't expect another earnings gap up. We got another one. So we've gone back to back earnings gap ups on this name. We got long here. Then we get an earnings gap up 5 days after entering, which takes us to 18. Then consolidates beautifully, really. I mean, look at this very, very clearly defined $17 support. Consolidates beautifully for a couple months for us, then goes into another report and gaps up again. So we've been there for the re-rating on this name. I mean, my contracts on this are up 730%. 730%. So this has just been a killer for us. And we saw this story early, and now people are upgrading it left and right. But for those of you that have been in this community since late last year, you read my note on it right here, telling you that this was going to be a re-rating story, and we have been a part of that re-rating as the stock is now, basically doubled from our entry, almost there. Not quite, but almost there to a double from our entry. Now, this is why I still own this thing, because let's zoom out, right? Look at this, right? I mean, we are just, I don't want to say just getting started, but I mean, you break above 27 and this thing just has unlimited range. And yeah, you look at the yearly chart, look at this yearly chart. Above its moving averages on the yearly for the first time ever, right? And this stock has been public since 1993, and it's above its moving average on the yearly for the first time ever. Yeah, you get a yearly close above 27, watch out. So this thing is gorgeous. I mean, look at the quarterly chart too. Every time frame is just like this reminds me a lot of Kratos at $20, to be honest. Um, and yeah, it's just been gorgeous for us. And now with this cushion, it's going to be so easy to hold. It's going to be so easy to hold. I mean, owning it at 1360, I mean, there's going to be very few things that are going to put me in a position to sell this stock. So, it's third biggest position for me right now. Probably going to continue to be a position I own for quite a while. They are firing on all cylinders, killing it on the business. It's really funny. People were telling me when there were some insider sales on this thing at 16 to sell it. People are stupid and pay attention to the wrong things. You just have to know the thesis, know the company, know the story, know what you're looking for momentum in. And these guys are doing everything I expected them to do. If you go back and read my original thesis on this stock from October of last year, which you can find it in my journal, but if you go back and read my original thesis, exactly what I said is happening in this business in the last 2 quarters. Exactly what I said. The Spearnet acquisition is showing huge synergy, and they're building momentum on their own in the network enablement and network testing services. So they're killing it. They are killing it. And I think it's more than just a data center tailwind for them. I think it's a broad tailwind across most of their customer sets. I mean, they talked about drones so much on the last call. That's something that I didn't even really consider as an angle on this name when we first bought it. And now that the drone angle's in it too, I mean, you're not going to be you can't be too concerned if there is a new angle that arises that you already want exposure to. Like if you already want exposure to something and they bring it up on the business, like great, why would you be worried about that? So, yeah, what a stock. And there's a reason why it's been the third or fourth largest position for quite a while. Again, my conviction is always shown through weightings. Pangea, we went over. Huntington we have this week as well. Huntington has doubled for us at this point, and just continues to act so strong. I mean, look at this consolidation up here, high and tight, right? With an affinity for the 9 EMA. I mean, every time it gives wants to forfeit, it just snaps back, even on gap down days in the market. What a beauty. And back here in the low 200s, when I was telling everyone to buy it because Trump's talking about shipbuilding, people were like, that's too obvious of a trade. It's so funny. Some people should go back and read the comments on my first Huntington Ingle post from late last year, or sorry, early last year, back in April, I think is what it was. But you go look at the comments on that post, people are like, duh, dude, shipbuilding, duh. That's like what all the comments are. And the stock doubled. So much for duh, right? Sometimes the consensus trade is the right trade. And I'm not a big contrarian. I talk about it all this time. I talk a lot of shit about contrarians. I think it's such a stupid game to play. And why, in a bull market, why be a contrarian? Just buy the strong stocks in the right themes and just own them. Making money is not hard in a bull market. It shouldn't be. If it's hard for you to make money in a bull market, you're buying the wrong things. Simple. It's very, very simple. Buy stocks above all their moving averages in good themes that have reasonable valuations. It's really, really hard to lose if you do that across 10 or 15 positions. If you do it across one or two positions, yeah, it's easy to lose because you can't put all your eggs in one basket. But if across 10 to 15 positions, you're buying positions that are thematically relevant, right? That are have reasonably valued, especially relative to peers, and that have strong charts, it's hard to lose in a bull market. So just keep that in mind. For a lot of you, the stuff you tag me in, like you tag me in garbage charts, or some of you will tag me in like earnings gap downs, where stocks knifing through the 100 day, and you're like, you think this is a good buying opportunity? Like, sure, it might be, but the risk reward, the asymmetric risk reward of contrarian trades is attractive because people want to make big money fast. They want to catch a gap up the day after they buy. That's not how you consistently make money, right? That's like you know, going for the slot machine at a casino rather than the blackjack table. Like, you might want the jackpot, but like that's not how you consistently win. And in the market, it humbles people very quickly. I mean, people will hit a big trade and then they'll chase that feeling and chase that, you know, uh, I want another 25% gap up. They just chase that in perpetuity. And that's really what most of Twitter is. It's just a bunch of kids chasing a home run. And that's why everyone sucks at stock picking. That's why like 90% of these people suck at stock picking. That's why every month their whole membership cancels their service and they have to find new people every single month because you can't build consistency by swinging for home runs. You swing for home run on every pitch, you're not going to be consistent. You're not going to be a consistent hitter. So, yeah, Huntington's been great. They have earnings this week coming up. This continues to, I mean, it's not marked as a core position, but it essentially functions as one. It's basically the core position in my shipbuilding basket. There's only two positions in there, this and GLDD. Pangea Logistics is more of a shipping company, not a shipbuilding company. But um, I don't really have plans to sell this one anytime soon. I mean, the valuation is a little stretched now, but it's still not vastly unreasonable, I don't think. And if they continue to secure the type of awards, subcontracting awards they've secured over the last 2 years, their overall run rate could increase pretty substantially, and that will force the multiple to hold, I think. So, yeah, I like this name a lot. Still like it a lot, and I don't see obviously any points of concern. I mean, what is there to be concerned about, right? Just a beautiful chart that has just been relentless to the upside for quite some time. Um, Obviously, the number one thing to keep in the back of your mind for all these super strong names that we're talking about is, yeah, they're all a bit extended because they've doubled in a year. That means they're a bit extended, but they haven't given us price action reasons to signal an exit. Being up a lot is not a reason to sell. I firmly believe that. Like just saying I'm up a lot is not a reason to sell. Now, from a personal standpoint, if you're up a life-changing amount of money, right, that can change your life personally, then yeah, that's a personal decision to make. I'm not saying you should never sell a stock. I'm saying if you're up millions of dollars on some stock that you never thought you would be, and taking that money is going to change your life, take the money. But if you're in a position and you're like, well, should I sell because it's up a lot? That's not a good reason to sell. It's not. Stocks can go up a lot for a long time. So you just have to know what you own and build a criterion for what would make you sell it. And for me, that criterion is always A, first I get a warning sign from the chart, and then B, I go and revisit the thesis and ask myself, is this technical concern validated by a change in my thesis? So essentially, I look at a chart that's potentially breaking down on the daily or weekly, and I say, okay, let me go back and look at the thesis. Let me go back and look at the details and make sure that this is just noise. And sometimes it is just noise, and I go, okay, no worries. And then other times I'll go, oh, I see why the price action is unfavorable. I see why the chart's breaking down. This, and this changed. And then I may sell the stock, right? So the technical action sometimes forces me to manually reevaluate the thesis. And then I realize something or notice something I didn't notice. And then boom, right? And then I sell the stock. So that's kind of how I exit names. And as some of you asked that question before, and I've said it's nuanced and I've said it's multifaceted. It is, but that's a simple explanation for how and when I exit names. Um, so yeah, that's Huntington. And then we'll look at GLDD next. Okay, so GLDD kind of reminds me a lot of the Pangea Logistics chart on this gap here, and then building structure, letting the moving averages catch up. We got this nice 21 EMA pulled up around 14, 15, 58 now. Again, no signs of distribution, right? What would be concerning is on these alert candles when we come in with big volume, if there was just big volume selling, but there's not, right? On either of these names, it's just small sellers coming in, and even on declining volume, bringing this thing into the nine, allowing it to consolidate. So it's setting up to me beautifully here. Push back above 15 today to recap the nine. And again, structure building wonderfully. Another one. We're on this monthly chart. You have a nice stacking of the moving averages here, right? Room for expansion and separation of these moving averages. Same thing here. You have room for expansion and separation of those moving averages. So I like this name a lot, continue to really like it a lot. I like that JP Morgan read my notes and came out with a $20 price target on it. That was helpful to us. We got this candle because of that and got some new entrants in it. But I think the thesis here is still very sound, right? Largest dredging contractor in the country. We need more dredging to expand ships, build more waterways, expand ports. Pretty straightforward thesis. No real bells and whistles here, just a straightforward thesis. A company that's going to earn more money as a result of a renewed shipbuilding focus. So, straightforward thesis, keeping it sweet. This thing is very, very cheap, continues to be a very cheap stock that's getting a new renewed thematic focus. When that happens, what do you see? Multiple expansion. We talk about this all the time, right? Find a cheap stock in a thematically relevant sector and look for multiple expansion. And, you know, sometimes you get it, sometimes you don't, but we've been getting it pretty consistently. So this name working really well. All right, Centrus, we covered this last week. Had a nice start to last week, and then when that rare earth news came out, this thing dumped with the rare earth complex as well. Rare earths were weak again today, and this thing got punched in the face again today. So 3 days, sorry, of bad action, peeling us off this 340 spot, peeling us below the 50-day. Now daily and weekly showing some signs of concern. Let's look here on the daily. We have our head poking below the 50-day. On the weekly, we have a down curling 9 21 week EMA. Leo, don't growl. 9 and 21 EMA poking down. Now, where should you expect to find support here? Well, I think you should be looking at this monthly chart, right? Because when we talk about this name and what makes this name technically attractive, we've always talked about the monthly chart. You go back and watch my workshops from last August, last September. I forgot what the first one was we did on this name, but I think it was episode 3 or 4. We touched on this name a lot last year, and I always said, hey, we're looking at the monthly chart on this one. That's really where the structure has shown up on this name. The weekly and daily charts have not really been easy to follow. They've been a mess. You look at the action back here, like this is tough action to sit through. It doesn't even know what's going on, right? You look at this action on the daily, like, oh, this is just a noisy chart on the daily and weekly. So sometimes you see that. You see a chart that's just very noisy on the daily and weekly and keeps giving fake out signals, and you say, all right, I'm just gonna look at the monthly, and that's what I'm doing on this name. And you look at the monthly on this thing, looks like a hell of a chart, and continues to look like a hell of a chart. And we zoom in right here. I mean, like, what's to be concerned about here? You have a moving average cross here, the 9 month crossing over the 200 month. These look like they're impending and still climbing to the upside. Beautiful structure around this 9 month, right? Ever since this thing got moving, moving averages were all stacked here. Ever since it got moving, look, a lot of fidelity to the nine, right? Even here, the lows, right? The lows of this monthly candle in December. This was a month where a lot of people were concerned about the stock, right? But look, price barely moved and still closed above the 200 month. Then you have this candle again, defense, and allows for the cross, allows for the 9 week cross. And then here you have a little bit of red. Okay. I think this thing, you look for it to defend 240, right? You look for it to defend 240 on a monthly close perspective, which means by the last day of the month. But intra-month, you should expect it potentially to come down to the 220s. So you want to look to 221 to 242, really, this kind of area as potential support. If this name continues to get catalyst, I don't think it's going much lower than 242. If it doesn't, if there's markets weak and we see a market sell off, maybe you see 220s again. But a name I continue to love, for reasons outside of the chart, but also I love the monthly chart. But for reasons outside of the chart, a name I continue to love, I still think it's the best nuclear stock to own because of the choke that they are in possession of, right? You look at all these other nuclear fuel enriching opportunities in the United States, they just aren't on the level of Centrus in terms of the fact that they are the only DOE qualified and supported enricher in the nation, and they're expanding capacity and expanding centrifuge capacity as well. So love this name, but yes, the daily and weekly are a bit concerning and have been weak lately. And unfortunately, it's getting grouped in with the rare metals trade, although I think for it should not be grouped in. I don't think there's any extension between the rare metals trade and this name, but I get why it's being related because the nuclear names are being grouped with that, right? I mean, we saw selling in the nuclear names as well, pretty broadly when that Reuters article came out. So it's getting grouped with the selling, baby being thrown out with the bathwater. That's fine. Daily and weekly charts are a bit alarming, but that can change in a single candle. This is the type of name, because of the short interest, that can move 10, 12, 15% in a day. We've seen it many, many a time. And so, it does have a wide ATR. You do have to recognize that, but I continue to like the name. Obviously, if this monthly structure were to break down, in other words, you're to see a monthly close below 220, let's say, that would be concerning to me. That's where I would start saying, okay, do I need to sell some? How do I manage this position? But I don't think that's going to happen. We'll see. Cross that bridge when we come to it. But I don't think that you're going to get a monthly close below 220. I do. That'd be hard for me to see based on how this thing's been acting on the monthly. So yeah, that's kind of my view on Centrus. Let's look at Nebius next. Okay, Nebius, another one. We're on the monthly. We look straight, right? Like just fine. Now, as we get on these lower time frames, we start to see points of concern, right? Weekly here, we see the stock pinned, right? It just can't find its way above this 20 and or this 921 is also acting not really as this nine's not acting as clean resistance. It is sort of acting as clean support on the way up, but not acting as clean resistance. This 21 isn't either. So this is just a messy monthly chart. You do see signs here though, as you can see with the lower wicks of these candles. You do see signs here of potential strong support around 75 to 78. Now, you'd like to see the stock continue to defend that. You can kind of see the same thing here on the daily, right? 75 to 78 to 82-ish, really, that kind of band. You do see a faint area of support right here. Now, this 200 day is catching up to that area, right? 200 days sitting at 75 now, actually, exactly. So 75.11. So that's a nice thing to see that your 200 days caught up to an area of locally defined support. And so I think you will see this name continue to defend that 75 to 78 spot. And I think that continues to be a nice spot to potentially buy the stock if you don't already own it. Now, what does that correspond to? It does correspond to this local range, right? Which topped out around 76 and was prior to the Microsoft deal. So, in my view, both from a catalyst perspective and from a technical perspective, I think this name will continue to defend that 75 to 78 area. Leo, no. 75 to 78 area, I would expect that to be a decent buying zone. But it would be nice to see this thing rebuild its daily and weekly structure rather than having this sort of very, very noisy action in this 103 to 110 area that we've seen. So I don't love how it's trading. It isn't a stock that I would say is one of the best looking stocks on the market, technically. I certainly wouldn't say that. I expect this to be probably continue to be volatile and continue to get sort of hard sells on red days. But overall, the structure is still all right. It's still all right. It's not great, but it's still all right. And for me, again, the reason I own this name still at all is because I think the story is unique. I think they have a lot of optionality. I continue to still be a big fan of their other businesses, ClickHouse, Toloka, AV Ride. I mean, the AV Ride robot delivers me food in Dallas like all the time. It's been 25 plus times that robot's delivered me food. So, maybe there's a little bit of personal affinity there, but also I think that there's a lot of diversity in the business and a lot of optionality in the business. So I think there's some valuation grounding here. I think there is a valuation floor here. And when you combine those other businesses with the Microsoft deal, I think that valuation floor becomes even firmer. So the stock has been weak. The stock has been underperforming a lot of its peers lately, which is a potential sign of concern, but a name that I'm going to continue to own. I mean, we own this from 23. I haven't added any since then. So it becomes really, really tough for me to justify selling this name when it's trading three times higher than where I bought it, and where it's just having some daily and weekly noise. So, not a name that I'm really too worried about, even though I don't love the technical structure. All right, THR. Titty Zach Beautiful. They got an upgrade this morning. Craig Hallam read my note. I'm just kidding, but maybe. THR, they got an upgrade to $60 price target from Craig Hallam this morning. Um, it was a really interesting note. They said that they are a leader in thermal management solutions and have not received the same attention as MOD, which is interesting because I said that last year when we bought this stock. But we got in to this name in November of last year, around here, and it's been great to us. It's been really, really great and really, really easy to hold. Has acted a lot like ENS on this way up, and has been really stress free. So smaller weighting for me because it's all in shares, but a weighting that can expand if it does good on earnings. So that earnings is coming up this week as well on the 5th. And again, just looks fine on all time frames. Doesn't no points of concern that I would highlight, but is a bit extended on the weekly. I think what's 6 weeks green in a row or five in a row. So, maybe that justifies a pullback into 41 or something. But either way, I think continues to look really good. And a name I'm willing to hold. This is not ever going to be a core position for me, ever. So I want to be clear about that. It's not the type of business I'm going to own for multiple years, but I am still looking for upside. I don't think 36 to 47 is what I was looking for. I'm looking for more upside than that. So not going to hold it forever, but not planning on selling it super soon either. So, we'll see. I mean, maybe if it gaps up 50% on earnings or something, then maybe I'll sell it, but we'll see. We'll see where the price action takes me. I don't really operate on targets. So yeah, we will see what happens. Okay, what's next up? PLPC, another one. I mean, yeah, a lot of these names, I'm just not going to be much to comment on. I mean, weekly, monthly look great. Daily, again, another one that trades sloppy on the daily. We've talked about this many times, but it's trading at all-time highs. I mean, what are you going to be mad about? Trading at all-time highs. Another name that can't keep up in weighting in the portfolio because there's no options on this name. They don't exist. It's not that I don't own them, they don't exist. So when the options don't exist, it's really, really tough for this name to compete with ENS or Amcor who have options in the positions because they're going to go up faster, right? They're gonna gain dollars more rapidly on those positions. So just part of the game. I kind of wish it wasn't so small weighting compared to how I intended it. I mean, at one point I think it was 9%. And it's not like it's gone down. It's trading at all-time highs, but it just doesn't have options. So it just can't keep up with the other positions in the portfolio, unfortunately. But again, no points of concern on this one either. In spite of the noisy daily chart, it continues to show very, very impressive uptrend on the other time frames. So That's pretty much it. I guess we can touch on Kratos and Hood real quick. Kratos, ugly four candle action, but thankfully on really low volume. Weekly starting to show a little bit of a sign infection here, but you should expect some grounding, I think. I don't think this is a real weekly close here. I think you're going to defend this local level, but maybe it could be wrong. I mean, if you don't, stock could fall to 78, 78 to 80-ish. I don't think some people are calling for a retrace to the 60s. I don't think you'll see that. Um, but if this thing falls into the 80s, 70s, I think that's a pretty strong buying opportunity for this name. I do feel that the valuation is still quite a bit extended on this name. However, one thing you have to keep in mind with these aerospace and defense companies is the valuation problem can be fixed very quickly. Because one big multi-billion dollar contract and boom, all the numbers change instantly, right? The PE ratio and price to free cash flow and all these things, price to revenue changes pretty quickly on the signing of some big contracts. So even though the valuation is extended, that could change instantly. But this is probably the name in my portfolio that I'm most valuationally concerned about. Um, so be mindful of that. It's not a name that I would buy here from a valuation standpoint. We bought this in the 20s, not a name I would buy here in size or anything. I mean, again, like I said, if you come back to the 70s to 80s, I think you could nibble on it, but I wouldn't here. Um, I would like to see this name either sign a contract or reset. Obviously, if it signs a big contract, it's going to get away from you quickly, and you're not going to get that opportunity. But that's part of the game sometimes. There's a lot of stocks, guys, that I've thought about buying at times, tried to wait for the right opportunity and missed them, or other stocks that I sold way too early. Two of those for me last year, Bloom Energy, which I alerted here at 20, sold that way too early. Talon in the 200s, sold it way too early. So some names you're going to sell too early, some names you're going to want to buy and not buy. That's part of the game. There's thousands of stocks out there. Don't like get your panties in a bunch if you miss one or two of them. Okay, Hood. Severe technical breakdown on this thing. You know, very, very ugly daily chart here. It's falling into a downtrend and now deepening the downtrend here with a break below the channel, below the 50 week, below the 200 week, monthly coming into this potential area of support, 72, 78 here. But this is not a name I would touch until you see actual technical signs of bottoming here. You may have to pay a higher price, but again, trading's not about nailing bottoms or nailing tops. Trading is about consistent, repeatable outcomes at very, very high probability spots. Right now, you don't have a high probability spot here, in my view. You need to see this stock show semblance of support. You need to see some confirmation of support before you touch this thing, in my view. Now, it could be that on this earnings coming up on the 10th, that this thing just gaps up, and that'll solve the problem. That'll solve the broken chart problem. So that could happen. I'm not telling people like, hey, you can for sure get this thing cheaper because they may have a great report on the 10th, and this thing may just shoot back up to the hundreds. But if you aim to be consistent, you aim to follow rules, this chart at this point is not a pretty chart. It's just really, really hard to make that argument with this kind of action breaking below the 50 week, breaking below the 200 day simultaneously. The 50 week and the 200 day are two very, very like commonly used spots. Those are very commonly used levels, both institutionally and in terms of retail, 50 week and 200 day. So it's breaking below both of those simultaneously. That means that there are prospective buyers who refuse to buy at that spot. That's what that means. And so, does that necessarily mean the report's going to be bad? No. It just means you have to be like, okay, you have to respect the market and say, okay, show me semblance of support. This is a name where I would actually rather buy this at above 104 than I would at 89. And again, blows people's mind to hear stuff like that. Like, why would you want to buy at a higher price? But that's just principle. That's discipline in markets. A lot of times, the right move is to buy at a higher price. So, be mindful of that. Okay, that's all. That's a quick review of all the positions. Now we can do some questions. Let me go to questions channel. A TikTok version. No, no, no. Questions channel. Don't put the questions in the chat. Have you considered fiber optics as a theme? Yeah, I have. Viavi cross applies to that theme too. And there is actually another name I have looked at, which I haven't made my mind up on yet. But yeah, in your opinion, what are the 3 to 4 most reasonably priced names out of the stocks added this year? I'm not going to answer that question. I share everything I do. You decide what you want to own. I don't tell you what you should own out of my portfolio. And in terms of what's reasonably priced, that's always going to be relative to your expectations of what you expect from the stocks. Reasonably priced fundamentally would mean you're taking a black and white fundamental approach. You're using like a P ratio benchmark or a PS ratio benchmark. I don't use that. My view on reasonably priced depends on the contextual opportunity, right? What is the stock trading at? Depending on the industry, I might look at price to free cash flow or price to sales or ARR or PE, any number of factors, and then cross-referencing that with the potential opportunity for re-rating and where you think the stock could go. That's really how you decide on what is reasonably priced. So it's not even that I'm not going to answer that. I can't answer that according to your own portfolio because I don't know what you want to own and I don't know which of my stocks you like. What should matter more to you is which of Stock Talk stocks do I like? And if you want to replicate my performance, you have to own everything I own. I'm not telling you have to own everything I own, but if you want to replicate my performance, you have to, right? Like some of you will be like, "Oh, well, Stock Talk, I'm not up 51% year to date. Why are you up 51% year to date?" And then I ask those people, I'm like, "Well, do you own everything I own?" And they say no. And I'm like, "Well, then why would you how would you be performing how I'm performing if you don't own everything I own?" So, yeah, if you're gonna pick some of my stocks, that's okay. A lot of people do that. Not everyone here owns everything I own. But if you're gonna pick some of my stocks, that has to be your discretion. Go read my research. I have research for all of the stocks that I own. Um, Learn how to read a chart and then find your entries and do that. Or buy when I buy, whatever you want to do. I share everything I do. Um, Okay, I'm not answering questions, thoughts on blank. I'm not answering those questions because that's too broad. We talked about this last time, guys. Be specific. What do you want to know from me about these stocks? Saying thoughts on blank is like a lazy question, you know? I don't know what you're asking me. What about the stock do you want to know? Do you want me to look at the daily chart? Do you want me to tell you my fundamental opinion? I have to know what you want to know. I can't just sit here for 30 minutes and talk about a stock. TA on Intel, please. Okay, I mean, we can look at it on multi-time frame real quick. Looks fine. Looks great. Nothing concerning about Intel. I don't know what this catalyst is that you're mentioning. Intel Softbell news that they're co-developing chips together in 2028. Cool. Tax season coming up. Get an accountant. I don't talk about tax advice. Do you expect a double beat for Cena on earnings? I mean, why do I own the stock? Obviously, I expect them to beat earnings. I don't know if they're going to, but yeah, I mean, I'm long on the stock. Do I expect a double beat? I mean, I don't know. It's not like I have the results in my pocket. This isn't the Oscars. Um, I am aware you are out of CRML. I wanted to check your views on the stock performance due to the news of creating a critical reserve. Yeah, look, CRML was a speculative trade. I had a bad entry. I got out. Period. And the chart looks bad now. So yeah, I have no plans to revisit it. Have you looked into any drone picks and shovels? KOPN, LPTH. KOPN. Yeah, I've looked at KOPN LPTH many times. Both stocks are too speculative and too expensive for my taste. Meta, you want to know my opinion on the chart? Let's see. Looks great. Looks like it's attempting to flag here. 9 EMA needs to catch up though. Weekly looks superb here with this confluence of the moving averages right there. Looks great. Meta looks good. Have you not looked at SHMD? I have. Great idea from Mystic. Me and Mystic have a little bit of a different style. You guys who have followed us for years know this. Mystic is a little bit more speculative than me. He's a little bit more theme driven, but he's very, very smart. He's like probably one of my favorite traders. He's one of the only guys that I pay attention to. I don't like read anybody's stuff on X ever. I'm never like reading my X feed for ideas ever. I just come up with my own ideas, but I respect what he does. But I just don't really like following other people into ideas. It's not really something I do generally. I just try to be an original thinker and think about my own ideas. But it's a great idea. It was super smart play and it's gone up a lot and chart looks great. It's awesome. Another great call by Mystic. Is minus 15% your maximum risk tolerance? Generally on equity, yes. On equity, minus 15% is generally where I draw the line. And I've talked about that in terms of compounded losses. Once you go past a 20% loss, the return you need to make it back becomes exponentially higher and higher and higher. And so, yeah, I try not to let the ball slip away. Once you get to 15%, I sometimes just pull the band-aid off. And that's what I did with CRML, which I'm thankful I did because it kept falling for the next 3 days. So, yeah, when I hit my max pain point, I cut it. Opinions on Galaxy. I love Galaxy. You guys know this. I tried getting long on Galaxy last year a couple times. It was one of my only losers from last year. I think it was like one of three stocks that we lost on entry last year. But yeah, it's just had not acted well. It's not acted well. And that's why I haven't bought it back. Um, like this daily action is kind of gross. Like you see this basing here, you pop into the 30s and now you're back here. And I think the main reason is just Bitcoin has acted like shit. And even though Galaxy is really a data center play in my view, with Bitcoin acting like shit, it's really, really hard for this name to get momentum. That's been the issue. So do I like the business? Yeah. Do I like Novogratz? Yeah. Do I like their management team in general and what they're trying to do? Yeah. But I think you need momentum in crypto for this thing to really find footing. I don't think the data center momentum is going to give these guys enough of a push on the technical side. And so chart's got to fix itself. Crypto's got to start participating. I'm not touching Galaxy until then. You maybe not be a contrarian. Is SNDK cheap on its future projected earnings? Are you interested in memory play? Yeah, I was interested in memory late last year. I just didn't pull the trigger. I missed it. I'm not chasing it here. Yes, they're still kind of reasonably valued, especially MU and SNDK, but you're playing with fire, because I don't know when the cycle is going to stop for memory. I don't know when it's going to slow down, and I'm not a chaser. I've talked about this many times. I missed that move. Some people sniped it perfectly late last year. Some people sniped it at the beginning of last year, and they're still holding, which is crazy if you did it on a name like SNDK. But yeah, I strongly considered taking a position in Micron in November of last year. I should have done it, and I didn't. That's okay. I've done very, very good in spite of that. So I look at my portfolio as a portfolio and I try to do well on the portfolio. There's gonna be names I miss, but my performance kind of speaks for itself, right? So yeah, I just missed the memory trade and I have no plans to get into it. A lot of people got killed on Rambus today for that reason because they wanted to find a sympathy to the memory trade, got into Rambus pre-earnings, stock gets dumped, because the valuations for the surrounding components are quite high. The expectations are quite high. So that's going to be a hard trade to find a spot into if you don't already have one. If you don't already have a seat, it's going to be hard to find a seat. So that's kind of how I think of that trade. Because it's just not, THR is just not the type of business that I would make a core position. It's just too boring from an industrial business standpoint. So no, just not, won't happen. It doesn't mean I can't hold it for months. I may hold it for 9 months. I'm certainly holding it through this earnings. So doesn't mean I'm not holding it through earnings. Doesn't mean I'm selling it anytime soon. But it's just not going to be a core position. It's not that type of business. Um, Now that could change. They could open up a new product line that I become very, very interested in. Maybe Poseidon, the liquid load banks product line becomes a much bigger product line than I'm anticipating. So things can change. But based on the current business, no, it's probably not the type of business I'm going to make a core position. BWXT and RDW charts. Let's look. BWXT looks great. RDW looks great. They both look great. Yeah, you got a 200-day retest here. As long as it defends here, if it breaks below this 200-day, then maybe not. But for now, it looks good. Why not in a HISTS? I was in it last year for a little bit of a trade, but I sold at the local lows and got out. Again, not a stock I can build conviction on. I can't build conviction on like pre-revenue stuff. Just can't do it. And if I can't build conviction, then I'm not going to hold it. If we looked into VITL, Great Peg Ratio, food pyramid, I don't do food businesses. Thoughts on housing market theme with Trump's recent comments on housing? I tried the housing theme last year. Trade didn't work. Too complicated. It can't be. Thing with housing is you can't drive it on policy comments alone. You need rates, yields to participate, and we didn't get that last year. And I took a L on. I think it was Dreamfinder's Home. That's what I was long DFH. I think. But no, I'm not doing housing again. It feels likely Arctic and Greenland activity keep ramping from here. Do you see yourself adding more to this basket? Yeah, there's two other names in the Greenland basket that I like that are actually original ideas, not like CRML, but I am looking at them still. Yeah, just waiting for entry. So for now, it's just Pangea Logistics in that basket. Iron chart looks fine. Looks fine. Looks good. Looks great on the weekly. But yeah, this is a good looking chart. Nothing wrong with Iron's chart. Well, I don't have any thoughts on the earnings coming up. Thoughts on their HIS backlog and how their ability to deliver may affect the stock price. I think you know the answer to your question. Obviously, if they can't deliver on their backlog, obviously the stock would go down, but that's not a concern for me. Are you concerned by letting stocks break down the monthly chart? I never let stocks break down the monthly chart. That's when I start getting really worried. I don't want to say never. I never say never. I don't. There have been stocks that I've allowed wiggle room on the monthly chart, but if you get a monthly close below a really significant monthly moving average, that is a red flag, a big red flag. And you need to start asking yourself questions at that point. If you can find good answers to the questions that you pose, then okay, maybe you can hold it. But I do not hold through severe monthly breakdowns, probably not. GDXU. I'm not charting a 3x levered ETF. Need your opinion on Iron Chart, please. Already gave that. Do you think PSTG could be a key stock for the next constraint in AI for flash memory storage? Maybe. I know everyone likes that stock because it's Gavin Baker's biggest position or something. Um, yeah, I mean, it looks nice here. It's trying to bottom at the 200-day. I'd like to see it get above like 73 rather than buy it here. Why buy it here at 70 when you can buy it above 73 above the 50-day? If you are looking at it, I would wait for that. Um, Weekly looks like it's building support around 65. Yeah, if you get a monthly close above 72, that'll be above 73, that'll be a simultaneous close above the 50-day and the 9 month. That'll be a nice entry, I think, if you really want to get long on this name. Um, I don't know what this thing trades at valuation wise. Okay. I'm not buying this stock, but you guys can have fun with this. Um, any thoughts on Hyperliquid? Well, A-Lab has been consolidated for so long. You own it. Yeah, another stock where we're sitting here at this 200 day. So yeah, maybe you get a bounce, but no, I'm not going to buy it. Monthly looks real nice though. That's a pretty look. You have this 147 local high here being defended. Now every 9 month EMA above that spot, 9 month EMA sitting at 148. This is a really, really pretty monthly chart. That's a hell of a chart on A-Lab. I'm guessing probably still at a ridiculous valuation. Yeah. Yeah. Um, Monthly chart for ONDS. Yeah, a bit extended. Weekly looks great. Weekly looks really nice. Yeah, this is a name that has looked great technically for a while. Um, yeah, it's looked good for a while technically, but yeah, it is very speculative, and I think the valuation is ridiculous. What's your max risk tolerance on calls or leaps? I don't have a max risk tolerance on calls or leaps. Those are supposed to be very, very volatile. If you have stops on your options, you're not going to do well on options ever. Do you care about drawdown from unrealized P&L? Like if a stock goes up 200%, then drops 15%, does it matter? Only if it's a new position. It depends on the thesis and depends on why I'm holding it. But no, I don't usually really care if a stock draws down 15% after going up 200%. No, stocks are supposed to be volatile. Do you think UU is a good weekend buy a 9 week EMA? It looks extended on the monthly. I owned UU at like 6, 7, $8 and sold it last year, so I'm not interested in getting back in. But yeah, it's building nicely on the weekly. Yeah, I think you could probably take a stab at it at the 9 week EMA, but like why? The stock hasn't really shown a ton of affinity to respect that. I would say probably down here at the 21 week might be a bit better at, but I don't know if you're gonna get back down there. What's going on here? Oh, maybe. Yeah, I would prefer to buy this thing like in the 17th if I could. But I don't know if you're going to get that because, it could just bounce here off the 9 week. You could. It's a risky buy though, in my view. What do you think makes ENS different for such a climb? It's been cheap for a while, and as it's gone up, it's become cheaper, and it's also multi-theme exposure, and so they keep getting catalyst to drive it higher. That's why ENS has been acting the way that it is. It's just a really good stock, cheap, thematically relevant stock that's growing. I mean, that's why there's no sellers. Yep, that's exactly what I'm looking for on the Pangea Logistics earnings. More activity in the Arctic routes, higher rates for their Arctic class ships. Yep, that's exactly it. And that's another very simple thesis, just like GLDD. GLDD and Pangea Logistics have very simple theses. Just benefit from activity. More shipbuilding activity, more Arctic activity. Thoughts on Caterpillar? Okay. Yeah. I mean, what am I going to say about this? Riding the 9 week EMA to the upside. Looks great. Yeah, it's trading at all-time highs. If you guys, I've said this last workshop. If you ask me my technical opinion on a stock trading at all-time highs, my answer is going to be looks great. What else do you want me to say? Stock's trending up. Stock's going up and to the right. Probably keep going up and to the right until something changes. So yeah, there's no point in asking me about my technical opinion on stocks trading at all-time highs or close to all-time highs, above all the moving averages. What are your thoughts on RKT business model? It's a cool business model. I mean, I haven't really deep dived the company or anything. I think a lot of people are way too obsessed with that stock for some reason, but got dunked on here, trying to recap the 100 day, can't recap it right now. Maybe finding support at the 200 though, so maybe you're allowed to consolidate here. Same thing with the weekly. Like you need to see a weekly close probably above 19 to make this interesting again, I think. That'd be a really nice look here. You get a weekly close above 19 after finding support at the 9 month, 50 week. and 200 day, that's nice. Confluence of support at the 9 month, 50 week, 200 day pushes back above the short term moving average on the weekly. Great. Clean look. But again, a stock I'd rather buy at, 1910, 1920 than I would at 1877. And it's just, again, a preference of buying at better spots on the chart, even though you might buy at a higher price. That's really the thinking there. Is there any particular reason you chose entirely options exposure versus calls and shares? Remember with Dawkins, you mainly own calls on that. Was it more about the properties of the contracts or the thesis? Sometimes the IV is real low and I just don't want to allocate too much buying power. And so I pick it. A lot of my decisions these days are just instinct, right? It's just like I look at a stock and I'm like, oh, I don't really need shares, or maybe my buying power. I think with DigitalOcean at that time, my buying power was a little low. I think that's why I did that. And the IV was low back then. So just a double whammy. If I can get low IV liquid contracts on a stock, and by low IV, I mean like, sub 50 IV, sub 60 IV, if I can get that, and then, it's a stock that I want for a trade, not an investment, then yeah, I don't need shares sometimes. So that's really all that was. There's no specific properties that I'm looking for, but I am looking for certain properties on the options chain, right? Low IV, liquidity. So it's more about what does the options chain look like, right? That makes those decisions. If the options chain is liquid and low IV, there's a good chance I'm going to substitute a lot of the share exposure with options exposure. So yeah, it just depends. Can you go over the AVAV chart? Yeah, we had a killer trade on AVAV to start the year, and we actually sold right at the perfect time before that earnings. So that was awesome. But I'm probably not going to get back in. Good entry point depends on your risk tolerance. You could just buy it here. The 200 day. This is where we bought it last time. Could buy it here again. You got a 9 week EMA, sorry, 9 month EMA, and a 200 day SMA confluence here. Could just buy here if you want to be risky. If you want to be a little bit more strategic, um, you could wait for like a reclaim of 300, but I mean, that's quite a bit of room. So yeah, I mean, if you're willing to take a stab, I would take it here, but then, maybe use your stop as a daily close below the 200 day or a monthly close below the 9 month EMA. That would be fine. I prefer Nebbies over Iron because they have many other businesses and not just a data center business. And I think that that offers them valuation support. Thoughts on the QCOM chart. Had a nasty monthly close, but it's trying to build some support here, down here, below the 200 day. Looks like maybe 150 might have been the spot where it's trying to bottom. But again, not a chart that is pretty yet. And again, what do we always say? One candle can save it. This thing has a good earnings report this week. It could fix the chart real quick, but we need to get back above 160 on this name to start looking pretty again. So hope this name gets over 160 on earnings if you want it to look better. Um, if you start to see signs of a market top, how do you hedge or prepare for the downturn? I buy puts on indexes. That's how I hedge. Will you go for a data centers on space theme that now that Elon started to mention it? Elon started mentioning data centers in space like 9 months ago. We've been under a rock or what? Thoughts on the move from copper to fiber optics? Also, D-Dog chart, thanks. I don't know what you mean about the move from copper to fiber optics. That's not a move that's happening. Thoughts on the D-Dog chart? Needs to do work. When a stock's below the moving averages like this, it needs to do work. This has work to do. It is sort of finding some semblance of support here at the 100 week, so maybe that's a sign of bottoming. Not a chart that is interesting to me. Um, what got me into the GME lotto? The chart looked nice, and Burry wrote about it. That was it. Any interest in getting back to HLIO? Nope. But it's been very strong, very nice chart. Most stuff I sell has been pretty damn strong. So, you know, that's a product of good stock picking. I can't own everything forever though. So every time I sell something, a couple weeks later, it's strong. People start tagging me saying, "Well, why did you sell it? Why don't you own it still? Why don't you buy back?" I can't own everything forever, guys. And I'm not going to have 30 positions. So a lot of the selling is just virtue of I can't own everything forever. Breathing a path agent for AI agent exposure this year. I don't know. We made a killing on the last path trade. I'm not interested in revisiting that. And the chart's not pretty at all. So yeah, I don't really have an opinion on that. How to determine company valuation and balance sheet basics. Again, too broad of a question. You guys have to be specific. If you want a good answer from me, you have to be specific. If you want me to just sort of shoot the shit with you, then you can ask these super broad generic questions, but it's not going to be helpful to you because I don't know what you're asking. Like, yeah, I need to know what you want to know, right? So, how to read a balance sheet is a very, very generic question. There's a video on it in the videos channel. I think there's several videos on it. So go watch them, and then ask me questions. Some of you don't want to learn. You just want me to like tell you. And that's not how it works. I can't like give you a sticky note of like, hey, here's X, Y, Z, and then you just read that sticky note and you learn the concept. That's not how it works. You have to know what's going or try to understand what's going on with these concepts and then be like, hey, Stock Talk, I don't get this. You know, then I can answer and then I can help you. But don't take a lazy approach to it because that's what broad questions are. Broad questions are lazy. I've followed PLAB since you bought it and bullish given the downstream impacts from the memory trade. Yes, there are bullish downstream impacts on PLAB from the memory trade. Any thoughts on getting back in? No. NTCT, yeah, that's been great too since I sold it. It's been very nice consolidation. I might get back in. I mean, maybe, but not something that's on the top of my priority list. GNRC is a relatively reasonable valuation. Nice chart. Really nice weekly look. Nice monthly look too. See this kind of rejection around the 50 month, pop above it, then you get a nice supporting candle. Nice. Yeah, pretty. Do I think LU will round trip to 100 if the AI bubble pops? Bro, if the AI bubble pops, the whole market is going to crash. You don't have to worry about if LEU is going to 100. Everything's going to get cut in half or more if the AI bubble pops. That's a silly question. Is this where we ask questions for the live stream? Yes. At some stage, would you do a workshop where you're doing fundamental analysis for positions? Yeah, again, fundamental analysis, a very, very, very broad topic. What I'm doing for fundamental analysis varies dramatically from position to position. The metrics that I'm looking at varies dramatically from industry to industry. P/E ratio, price to free cash flow, price to sales, annual recurring revenue. You don't look at these for every stock in every industry. You look at some of them for some stocks in some industries. How do you know? Well, you start doing research. You find out how companies are valued in a particular industry, right? You put your head in the sand. It's tough to figure out perspective on those things. But if you look at the details of certain industries, certain software industries that are valued on ARR, for example, instead of PE ratios, you might look at a PE ratio for software stock and be like, what? It's crazy. And then you look at some of the ARR, price to sales metrics, and it makes more sense. So it depends on the industry. There's nothing specific I do. I wish trading and researching was as easy as ABC, one, two, three, follow these rules, follow this list, you'll become a genius. If it was that easy, I wouldn't generate alpha consistently, right? If I was using some sort of ABC one, two, three process that could be taught in 10 minutes, like, wouldn't everyone just be a millionaire? That's how it works. You learn over time, like about what perspective you want to take on stocks, how to contextually integrate information, like how to conduct real analysis. You learn that over time. So if you have questions about fundamental analysis, I'll answer them, but be specific. Don't say how do you do fundamental analysis. That's like a very, very insanely broad question. Um, I don't know why it did what it did in 2025. I don't didn't go back and look at that. Are Amcor and ENS your top positions because you see massive re-rating, safe plays, or both? Why is this your big positions where I'm getting at? Because they have gone up a lot since I bought them. That's why they're that big. And they have a lot of options waiting. But yes, I like them a lot also. I didn't buy 22% of ENS in like one day. I bought whatever it was, I think 8 or 9% or whatever the starting weight was. Maybe it was 7%. I don't remember. And it went up a lot. And the options went up a lot. That's why the weighting is what it is. And same thing with Amcor. Amcor doubled and I had a shit ton of options. And the stock doubled. And the options went up 6, 7, 800%. So that's why Amcor climbed in weighting. But yes, I like both those stocks a lot, obviously. You do stock lottos like zero or hero. What are you looking for specifically? Um, Money? What is the incremental revenue and gross profit you estimate from P? Okay. Materials appear too close to guaranteed. Yeah, I mean, I have to go back and look at my notes. I did all that research when I first dropped the thesis. I might have included that in the original thesis, but I don't remember. I can't give you those numbers right now, though. I don't know those off the top of my head, and I don't have my research notes pulled up. It would take me a while to go back and go through if I did have the math down on that. Do you ever hold a position that you're done with and hedge it to hit long-term capital gains rather than just selling it? I'd never do that. I mean, I guess you could do that, but I've never done that. If you were to recreate your portfolio today and re-add these positions at current levels, what would your top three be? That's a crazy question, and I don't know. I would have to think about that. Why do you rarely sell stocks that are way above? Again, some of you are asking questions just to not have to do the work on your own. Because some of you want me to tell you what you should buy out of my portfolio. Like, think about that. Think about the perspective on that. Like, hey, Stock Talk, what should I buy out of your portfolio? It's a crazy question. Like, I don't know. I don't know what your risk tolerance is. I don't know what other stuff you own. I don't know what you like. I don't know where your conviction is. I don't know what industries you believe in. I don't know how much capital you have. I don't know what your buying power is. I don't know what your margin requirements are. It's just a crazy question. I don't know. I tell you what I buy. I show you the weightings. From there, you can figure it out, or you should be able to figure it out, right? You're in a severe form of dependence if that you need more information than that. Like I tell you exactly what I'm doing, what I'm buying, when I'm selling it, why. That should be all you need to follow me. You shouldn't need me to say, "Oh yeah, buy this, this, and this, and buy it at this, this, and this point, and then sell it at this, this, and this." I'll tell you what I do. You figure the rest out. Very small market cap for your liking, but I wanted to hear your thoughts on SYPR. I have looked at it, too small market cap for me. Lots of thematic exposure as they make. Yeah, I know. Do you have any thoughts on TTWO? I feel like analyst expectations are too great for the greatest media launch in history. It got slammed on fears about that new what is it called? That new world generating thing, Genie 3 from Google. Got slammed on that. Clearly an attempted bounce today, but not a good looking chart at this juncture. Do I think GTA 6 is going to be successful? Yeah, but I mean, not a name I'm interested in owning, I don't think. GTA 6 has been a really hard story to follow in terms of when it's coming out. Obviously, there have been a ton of delays. No, I don't subscribe to Burry. One of my friends sent me the article. For a new investor who wants to reconstruct his portfolio, would you recommend to match your port as is? And yes, I'm a lazy investor. I don't recommend you do anything. I tell you what I do, and then you figure it out. I'm not a financial advisor. What do you think of about Grab? Monthly is tempting. I think Grab's just a boring stock. And I think people are overestimating its potential. It's already a 17 plus billion-dollar stock, and I don't really do international names in general, but yeah, I think Grab's just kind of a boring stock. I think the business is boring, and yeah, it's just not interesting to me. And this is an ugly daily and weekly look. I wouldn't touch it with a 10-foot pole from a technical standpoint. So you could say maybe there's a semblance of monthly support here down at 388, but not my type of name. Technically, not my type of name. Fundamentally, not my type of name thematically. Not interested at all. Okay, OPXS. What, you guys want me to look at the monthly and weekly chart? Okay, I don't know what this is, but okay, too small of a market cap. Yeah, fantastic chart. Yeah, beautiful chart. Gorgeous. Gorgeous. Okay. You're looking to broaden out your Greenland exposure. Yes, I am looking to broaden out my Greenland exposure. There's two other stocks I'm looking at. I'm just waiting for an entry. What is your Corning on and light as the play of the copper to fiber transition said in data centers, other names connected to this theme. I don't know why you guys keep alluding to copper to fiber transition as if this is like a new thing. These stocks have been very hot for years. These are not like newly discovered stocks. Look at Lumentum's chart. Okay. You guys have to learn to get perspective on stuff. Does this look like a new story to you? Does this look like a new story? Does this look like something undiscovered? It went from 45 to $430 in months. No, like, can you buy this and make money? Sure. But that's not how you make money in markets, guys, by buying stocks like these. It's too many of you are just like FOMO'd in out of your minds. Anything that's just like ripping, you're like, oh, I don't own it, I don't own it, and you're like a rabbit. Like you're not going to ever be a good trader and investor thinking like that. Find based out stocks with good stories that have room for multiple expansion. That's how you make money. Not chasing stuff like this. Yeah, it's a great stock. It's a great company. They're executing. It could keep going higher. It could be $1,000 next year for all you know. But is the risk reward good? No. And this copper to fiber transition people keep alluding to, guys, you are not discovering some alpha here. This has been a well understood and known story for 9 months. If you're not already long on these names, this isn't some like stunning undercover, under the radar opportunity that you're stumbling into. And like six of you have asked about these stocks, which is why I'm emphasizing this so much. Would you do a webinar on how to combine options with shares when it makes sense? There's no need for a webinar on that topic. I allocate 10 to 20% to options that are close to the money, roughly 5 to 10% out of the money is what close to the money means. 2 to 3 months out for trades, 6 to 9 months plus out for longer term positions. That's it. That's the webinar on options. Do you think OSS deserves the same price to sales multiple as KTOS? No. Any plan on earnings lottos soon? I don't, it's not something I plan. If I see something interesting, maybe. Looked at J. No, I don't know what that is. Okay. If governments are contract supporting projects at Patufic, what kind of projects? What are they doing? I don't love this daily look, but I did like the weekly and monthly look on this. I'm trapped in BMNR for minus 48%. What should I do? Sue Tom Lee. Are Amcor and ENS your top positions because you see them? Oh no, I already answered that. Um, well, yeah, I'll look into the Patufic relationship here because I think the monthly and weekly are nice. What's the valuation like? Oh, maybe not. Oh, not crazy. It's not cheap either, though. I imagine it's not growing particularly fast. No, they're not growing at all. I don't know. Not really that interesting. Um, yeah, I plan to only have a couple small caps in the portfolio at the time. I'm not going to have like five or six small caps at a time. Maybe I'll add another one at some point this year, but probably just two or three at a time. How's a chart for AXTI look? Great. All the moving averages, curling back up into the highs. Weekly looks superb. Yeah, it looks great. Yeah, I mean, yeah, looks great. Um, you guys have some of you asking the same questions or just repeating them? No, I don't apply the same logic for long options and index hedges at all. Index hedges are usually like maybe 2% out of the money, 1 to 2% out of the money. In addition to watching your workshops and following your feed, whether places you just are honing your charting skills, go through the resources and videos channel. There's plenty of educational stuff in there. Um, TA on hymns is the hype justified? LOL. No, the hype is not justified in my opinion. And the chart is fucking ugly on all time frames too. Oh my God, it's back at 26. No, hype is not justified for him. It's a garbage company. Hilarious how the cults get formed so easily on Twitter. And shame on all the fools that were pumping that stock too. Um, for those that remember my comments last year on the podcast about hymns, I was right as usual. What about Tiva? Great. Well, I mean, great, obviously. Above all moving averages on all time frames, just soar into the upside. Looks superb. All right. No more questions. We're gonna call it there. I think a couple things in the chat here. All right. That's, I don't know, what do we do? 2 hours or something like that? An hour 50. I'm gonna take Leo on a walk and then I'm gonna drink a protein shake and go to bed. Okay, I'll see you guys tomorrow. Well, I won't see you guys tomorrow, but you'll hear from me tomorrow. I'll be on Spaces, and then on Thursday I have family coming in town, so I will be MIA on Friday. Uh, but yeah, I'll be here for the rest of the week, and then I will obviously be here next week and for the foreseeable future. I don't have any plans for any out of town trips anytime soon. So yeah, if you have questions after watching back the recording, or whatever the case may be, then let me know, and I'll answer those questions. You can tag me in the questions channel as usual. If you guys don't get some of these concepts that I talk about, sometimes I just like refer to concepts and you don't get like the terms I'm using, don't be lazy, right? You have LLMs at your disposal for free. Use them, figure out what the terms are that you don't understand, then deep dive those concepts so that next time I'm doing a workshop and I'm talking about something, you're like, oh, okay, I get what he's talking about. And if you don't, then ask me. Then ask me. Be like, hey, look, I looked into this stock talk. I don't understand this concept still. Can you explain it to me? I like questions like that. Where I am impatient and sassy with you guys is when you ask me questions that you can use the search bar for or that you can Google. I don't like lazy questions. That annoys me because I don't want you to be lazy. But if you ask me questions like where you went and looked at it yourself and you're like, I still don't get it, can you help me? I will help you. I'm not going to not help you. If you ask me a really specific question, I will always help you. But again, you're going to get not snarkiness, but you might get like a little attitude from me from time to time if the question's lazy or if it's too broad. So keep the question specific and try to, you know, keep them topical. Anyway, I'll see you guys tomorrow. You ready? Peace.